Hey everyone, this is Martin Mi5 back for another video. Today's video is why was NEO suppressed today? Why was NEO stock suppressed today? And the second question is, will NEO see a short squeeze? So a lot of you might ask, what is a short squeeze? So let's go through that real quick. So here we got short squeeze definition, causes, and examples. So let's take a little look here. So what is a short squeeze? A short squeeze happens in financial markets when the price of an asset rises sharply, causing traders who sold short to close their positions. It occurs when a security has a significant amount of short sellers, meaning lots of investors are betting on the price falling, such as NEO in this example. A short squeeze begins when the price of an asset unexpectedly jumps higher. It gains momentum as a significant number of short sellers decide to cut losses and exit their positions. So key takeaways. I'm sure you guys have heard about short squeeze a lot with AMC stock and GME. So a short squeeze happens when many investors bet against a stock and its price shoots up instead. You guys saw this with the Wall Street bets. A short squeeze accelerates a stock's price rise as short sellers bail out to cut their losses. Contrarian investors try to anticipate a short squeeze and buy stocks to demonstrate a strong short interest. That's usually what I do with day trading, swing trading. Both short sellers and contrarians make risky moves. A wise investor has additional reasons for shorting or buying that stock. So, how does a short squeeze work exactly? Short sellers make their trades expecting that the price of the stock will fall. When a heavily shorted stock unexpectedly rises in price instead, the short sellers may have to act fast to limit their losses. Short sellers borrow shares of an asset that they believe will drop in price in order to buy them after they fall. If they're right, they return the shares and pocket the difference between the price when they initiated the short and the price when they buy the shares back to close out the short position. If they're wrong, they're forced to buy at a higher price and pay the difference between the price they set and its sale price. Because short sellers exit their positions with buy orders, the coincidental exit of these short sellers pushes prices higher. The continued rapid rise in price also attracts buyers to the security. The combination of new buyers and panicked short sellers creates a rapid rise in price and could be stunning and unprecedented. Fast fact, short squeeze gets its name because short sellers are being squeezed out of their positions, usually out of a loss. So their loss in many situations can be your gain. Short sellers zero in on a stock that they think is overvalued by the market. Now, is NEO currently overvalued by the market? I really don't believe so, not at this point. But, for example, Tesla captured the enthusiasm of many investors with its innovative approach to producing and marketing electric vehicles. Investors bet heavily on its potential, short sellers bet heavily on its failure. In early 2020, Tesla was the most shorted stock on the U.S. exchanges, with more than 18% of its outstanding stock in short positions. From late 2019 through early 2020, Tesla stock soared by 400%. Short sellers got hammered, collectively losing about $8 billion. In early March 2020, Tesla stock finally fell, along with most others during the market downturn. However, the stock eventually bounced back, leaving Tesla short sellers collectively nursing losses of more than $40 billion during the course of 2020. You would have think they would have learned their lesson by now. Apparently, you don't go against Tesla. You don't bet against it. So why do short squeezes happen in the first place? Short sellers open positions on stocks they believe will decline in price, however sound their reasoning. A positive news story, a product announcement, or an earnings beat that excites the interest of buyers can upend this. The turnaround in the stock's fortunes may prove to be temporary, but if it's not, short sellers can face runaway losses as the expiration date on their positions approach. They generally opt to exit their positions immediately, even if it means taking a substantial loss. That's where the short squeeze comes in. Every buying transaction by a short seller sends the price higher, forcing another short seller to buy. So you're beginning to see how this works here. Now let's talk about short interest. When identifying stocks at a risk of a short squeeze, two useful measures are short interest and short interest ratio. Short interest is the total number of shares sold short as a percentage of the total shares outstanding. The short interest ratio is total numbers of shares sold short divided by the stock's average daily trading volume. Speculative stocks tend to have higher short interest and more stable companies. Watching short interest can tell you whether the investor sentiment about a company is changing. For example, if a stock typically has 15 to 30% short interest, a move above or below that range could signal that investors have shifted their view of the company. Fewer short shares could mean that the price has risen too high too quickly, or that the short sellers are leaving the stock because it has become too stable. A rise in short interest above the norm indicates that investors have become more bearish. But an extremely high reading could be a sign of coming short squeeze, which could force the price higher. Now, speaking of price, as far as NEO stock current price, it's pretty much what analysts, what they said it was going to be. It's not really above or below what they predicted that the NEO price would be currently at this time. And I want to show you guys something. Everybody keeps talking about NEO specifically taking these losses and in the way it's been really suppressed, and it seems to be really consolidating. So let's talk about that. Let's go to the chart here. Okay. So this is the one-day chart for October 8th. And you can see here that this stock almost just traded sideways all day. No real dips or peaks. Okay? Now the dollar amounts might change slightly, but I want to show you some of the other Chinese competitors also did the same thing. Let's take a look at Li Auto's chart. Now, obviously Li Auto is selling for much more than NEO is. It's 28.04, but look at the pattern. Pretty much the same thing. Sideways all the way across the day chart. This Li Auto. Now let's talk about Xpeng, which is another one from China. Almost identical charts. I mean, the stock price is different. This is 12.13. The other one was 20 something. But the patterns and the trading, the consolidation is pretty much the same, almost the same exact pattern. They're almost identical. And that's more so because of the market than the actual individual companies. Now, when the market starts to recover, all of these Chinese stocks are going to recover at the same time. That's what happened last time. They all pretty much followed each other. Actually, NEO was kind of mimicking Tesla's performance, not in the same numbers, obviously, but with the same kind of movement. Just like Ethereum basically kind of follows Bitcoin. Same principle, obviously much different amounts. But yeah, that's pretty much what I wanted to tell you guys about that. So don't get your hopes up too much and don't get your hopes down too much. I'm going to make another video about different strategies for NEO. It depends what you want to do. If you guys are buying, like right now, would I buy NEO at the current price? No, because I don't know what the heck it's going to do. I'm still waiting for a good, solid entry point. And once I get to that point and I see that it's going to climb, I get confirmation that it's going to continue to rise, at least for, a short period of time, then I can buy into it in a small portion and continue to step on the gas, so to speak, as it rises. Don't just throw all your money in it. And then, like right now, if you guys buy at 626, and let's say you buy 1,000 shares, and it goes back down to like $3 and something cents, like say 326, you guys are gonna take a big loss for possibly a long time. You never know, and you do not want to get stuck bag holding. So be very, very careful about buying large amounts at a time. You should, if you have, let's say you have, I don't know, $100, you should buy in thirds. Use $33 to get in at a point where you think is pretty good. When you see it rising up, put in your other 33, and then when you know for dang sure that thing is skyrocketing, put in your last third, and then hold on, and then get out, before it's going to start coming back down again. Like back in 2020, it went up to 61 something. I think it was 2021, I think it got to 60 something, and then just freaking fell from there. So you don't want to, you never know where the peak's going to be. So you got to be careful. And hopefully you guys make calculated risk and don't get burned. So make sure you guys like, comment, subscribe. Make sure you click that notification bell so you can be notified when I make other videos. I do daily uploads, at least one video a day, sometimes more. So it just depends what's going on. So we'll see you on the next one, and thanks so much for watching.